YouTube man, what's good? We back with another video. Today's video is a mess. I recorded one before this. Hey. Just to find out that technology is working against me, nigga. But anyways man, today is a very serious video. Today's video is about high level financial maneuvering. Shh, people listen. Whatever I'm saying to you right now is not advice. I'm just sharing what I've learned. I've been doing some research, The business is running out of capital. So I need to figure out different ways to get capital. The banks won't speak to me. So I ran into a little bit more information, a little bit more different information, What I'm saying to you is the information I'm sharing to you today, I will not be held liable for what you do with the information. It's up to you. Speak to advisors, speak to those people before you implement anything I'm saying to you. Let's cut to the video, man. Let's cut to the video. Shit. I hope it fits now. Anyways, man, the creative brief. Using insurance to buy property. What the hell is this guy saying? Okay. The introduction or what we're gonna be going through. The introduction, the legal entities, the bank accounts, the life insurance, and then the loans, and then the contact us page. These are the pillars that we're gonna be touching on today. Listen, just watch the whole video. I'm telling you. Introduction. Who am I? I am Dorian Ross. I am an accounting graduate. Not that any of that has helped me to get to where I am. It's just because people don't listen to you if you don't have the qualifications. Listen, I've known these things before, but that's beside the point, man. That's beside the point. All I do on a daily basis is I look at the markets. I'm not talking about forex. I'm talking about high level investments, man. I'm talking about reading company financials. I'm talking about understanding OPEC trades. I'm talking about understanding global financial derivatives, high level investing. We don't play games, man. We don't play games. We use money to make money from a basement. All we have is a LAN cable connected to a laptop with music playing, with some sage burning, and we making let me not. Shh. So essentially, remember we said the structures that you need. Remember, you trying to buy property. Everyone's trying to buy property. I was speaking to one lady. She said, don't try buy property, maybe build. I was like, oh my days. Okay. But anyways, you trying to buy property. What you need to do, most people buy property in their own name. We know most people are idiots. Most people pay too much taxes. Most people don't know what to do with their money. You need to set up a company. The company is gonna buy the property for you. All a company is a legal document. That's all it is. And then you need to set up a trust. The trust will hold the shares in the company. Remember, it's very important that you get the structure right, because what you're trying to do, you're trying to maintain control of your operations without having any ownership. You want to have nothing in your own name. It's too risky. Because if you go bankrupt, you can't create another company. Because as a director, you cannot be bankrupt. You cannot be insolvent. You understand? So if you set it up through a company and things go sideways, only the company falls. You still have the ability to create the new company. And it's also to limit your liabilities. If everything is in your own name and you get sued, those people have access to everything you own. House, cars, life insurance, all of those things. So when you set up a company, the company holds the asset. Then you set up a trust to hold the assets in the company. On paper, you have nothing to your name. You see what I'm saying to you? On paper, you have nothing to your name. You don't get it. People, the name of the game is control over ownership. Own nothing. control everything. You can have companies, you can have trusts. The trust holds the shares in the company. You are a trustee to that company, and then you can to that trust, and then you can be a beneficiary to the trust. I know I'm saying a lot of crazy words. Just know, before you enter into a transaction, as a 22-year-old person, this is basically what you need to understand. You can either own something or you can control it. Control it. Always. Don't own anything in your own name. Let's go back to the video. I'm talking too much rubbish. Okay. We have the structure sorted out. When you buy property, set up a company, and then the company shares are held in a trust. Understand that, write that down. That's all you need to know. You don't need to go deeper. The bank accounts, people. The bank accounts are essential. Because we live in the digital age, baby. If you can't verify bank accounts, if a customer says, how can I pay you? And you say, no, pay me in cash, you're gonna lose that customer. You need to have a bank account. There's different types of bank accounts you can get. You can get a check account. This is basically a transaction account. Money comes in, money goes out. You're making transactions out of this account. You can have a savings account. Money comes in, you save it in that account. Don't really save money in the bank. If you understand how banks work, if you understand how banks use your money to make more money, banks are high level risk, people, because the innate business model of a bank is to take whatever money people put into it and lend it out. So when you come back to the bank and say, I want my money back, your money is gone. Your money doesn't exist anymore. It's not there. And if everyone runs to the bank and says we want our money, this is called a run on the bank. The banks usually don't have the money to pay. Don't keep long-term capital in the bank. Keep your working capital in the bank, right? Okay, key banks. Okay, now these 2 points I need to break it down to you in a different way. The banks you can use, F&B, Capitec. I know I mean Absa and Capitec. I know I have F&B on here, but F&B is crazy. These people, I tried to get a loan from these people. They say to me, listen, we don't provide secured loans. What is a secured loan? A secured loan is basically if you have an asset, you can use it as collateral for the loan, right? So if you don't pay, they can get the asset. The lady explains to me, no, F&B doesn't do this. I'm like, that's the dumbest thing I've ever heard in my life, right? Absa give money easily, Capitec as well. Whenever money is entering into this company that you created, make sure it's into one of these banks. Now, someone explain this to me, right? Why do you never set up one bank account? You set up multiple bank accounts with multiple banks. Why? Someone explained it to me. What I'm about to say to you, crazy. Listen, use this advice at your own discretion. I will not be held liable for anything. I'm just sharing what people have shared to me, They said, when the bank does give you money eventually, take that money and move it to the other bank account at the different bank. Because remember, banks operate in isolation. Absa and Capitec don't share information. These are competitors. Very important. So if money is coming into Absa, Capitec doesn't know about it. You take that amount, you pay it over to Capitec. Now to Capitec, it looks like a normal transaction. Money came into that account. Now here's where people do crazy things. Remember, people, whenever they're trying to get loans, what they do, they try to inflate revenue. So then they send that money back to Absa. Absa sends it back to Capitec. You understand? It's like a cycle, people. That same amount can become a much bigger amount if you catch what I'm saying to you. Remember, I do not provide advice. I'm just telling you how the system works, what people have shared with me. Back to the video. Back to the damn video. Reason, revenue movements. The rubbish I just explained to you. Life insurance. People. These people have figured out a way to attach a value to your life. What they do, they come to you, they take your blood, They test your health. They see your family's health. They see your day-to-day operations. They go into your life. This guy had a conversation for about 15 minutes asking me questions over the phone. Personal questions. These people have sophisticated metrics and algorithms that they use to identify how much you are worth as an individual. It's crazy. And I was like, nah, man, if that's how the system works, I'm gonna use this thing to my advantage. Which is what the guy explained to me. Which is why I've created this video. So life insurance, basically how it works. When you die, the insurance policy pays out that amount to your family or to the beneficiary, or if you get injured, right? Very important. When they ask you to set up the life insurance, by default, the beneficiary is your estate. You can't loan again. Your estate you can't really access until you die. So what I'm saying to you is, change your beneficiary to the trust that you created. That way you can access this money today, before you're alive. Before you die. Because life insurance is an asset, right? Remember, FNB said they don't provide secured loans. So loans with assets. ABSA and Capitec do. This life insurance is an asset to your trust because your trust is a beneficiary of this life insurance policy. So now what happens is, there's a key distinction that you need to understand. It's something called the surrender value. That's how much your asset is worth. You can loan out. Okay, I'm jumping, but just know, because your trust holds that asset, because it's the beneficiary of the insurance policy, this is what you can do now. Loans, people. Loans. Let me make this serious again. Loans, people. That's the name of the game. Loans are tax free. You can approach the bank via your trust and say, yo man, I am the beneficiary of this life insurance policy, which is an asset to me. Can you give me a loan against this amount? Against the surrender value of this amount? Bank will say, okay, who's your insurance? Who's providing the insurance? Oh, Discovery Bank. I know Discovery Bank. They're reliable. I can trust them. That's a good counterparty. Okay. Let's discuss what are the payment terms. And then they go, so basically they will give you the loan against the surrender value. Don't get out a loan for the full amount. If your life insurance is worth 1.2 million, do not loan out 1.2 million at 25 years of age. You will not be able to pay. You will not be able to service the debt. What you trying to do? When you're trying to buy a property, your first time usually, you need to pay a down payment. And the down payment for the first time is going to be a big amount. Maybe 50%, whatever it's going to be. You trying to loan out that amount for the property. If you see that your surrender value is 1.2 million and the property down payment is 100,000, you don't have 100,000 as a 25-year-old. Most people don't. Loan out 100,000 against your life insurance. Take that amount, put a down payment for the property. The banks will finance the rest of it, right? And then you pay a mortgage. But it's very important, the property that you buy, it's not a property that you stay in. This is an investment property. This is a property you buy and then you rent it out so that the tenant pays back all the liabilities you've incurred to buy the property. The loan against the life insurance as well as the mortgage, they pay that amount for you. So don't try to buy a crazy property for your first time. Look at a 2-bedroom, a small one, not in the center of a city. Don't be an idiot. Go to the outskirts, man. What you need to do when you buy a property, you need to consider 2 things, okay, multiple things, but the main thing is the location. Is it near a job center? Is there a mall nearby so people can go and buy stuff to eat? Are there schools? Remember, you're trying to please your tenant. You're trying to provide them with the best service available. Give them a place that's close to everything, that's neat, that's clean, that's safe. Right? And that's how you keep your tenant happy. Keep them paying you rent. And that rent that they're paying you services the debt for the loans that you got to buy the property. Essentially, now you have a property that someone else is paying for. It's all about how you structure the deal, right? It's very important. The interest rates, you need to be careful about the interest rates you are paying. Okay, I'm talking too much. Let's go back. Oh no, I'm skipping. What's next? Contact me. Listen, people, drop a comment in the comment section, I guess, whatever it's called. Then we can discuss things. I can share my Instagram handle. We can DM. I'm not trying to put my number out on YouTube. That's crazy. That is crazy behavior. Essentially, why should you contact me? I can give you access to bankers, to accountants, to lawyers, and people who can register your companies. School doesn't teach you that you need people, but you will not know everything, and you need to set up the structure that I've explained to you. If you don't set it up, you will never achieve the place. You'll never get to where you want to be. It's about the structure. It's about the people you hire. Not even hire, you work with them, and they give you advice. Most of the advice I've given you, I've received from my advisors. School teaches you that you need to do everything on your own. Most school teachers don't have really, it's difficult to listen to a person in that position, because school teaches you about the selfish mentality. Do everything on your own. Once you leave that place, you see that, I'll never win, because I'm going up against people who have teams. Business people have teams. A group of individuals working towards a common goal set by one individual, which is the leader. Robert Kiyosaki said the BI triangle. The main thing is you need to have a mission, you need to have a team, and you need to have a leader. You need to be that leader. It's not an easy job, but someone has to do it, man. But thank you for watching the video. It's a different video. I was trying something new. It's just in the spirit of learning information and sharing the information. So many people find something out and they keep it. You need to share. You need to share information, and then whatever people do with that information is none of your business. But man, thank you for watching the video. Hope the video helped. Do whatever you need to do. Like, comment, share the video. Subscribe to the channel. Drop a comment. Let's see. I'll be dropping more of these. As I learn more things, as I make more money, I'll be sharing exactly what's happening. YouTube costs nothing. I'm sharing this information for free. That's the key. I'm not selling a business. I'm not selling a course anymore. I used to sell a course, man. Ain't nobody subscribed to that. Okay, a few people subscribed. And I provided valuable information, But I realized, no, if you want to penetrate this market, you need to provide information for free. And then people need to find the value in it. And then they can talk to you for personal, like one-on-one, where you go and you meet them and you explain what you know. You become an advisor, a moving advisor, right? But hey man, some people are crazy. The tax legislation says you need to register to be an advisor. Who are you talking to? Get out of my face. I'm talking too much, man. Thank you for watching the video. Enjoy. Be happy. Buy some property. Look at some property. Scout. Set up your companies, man. But yeah, man. Thank you for watching the video. Peace and love. I'll see you when I see you, man. Yeah.